Hi everybody, welcome back. Again, my name is Angelica Renaud and I'm one of the students in Bryce's coaching program. Today we are starting the QuickBooks Online Certification Section 5, which is supporting your small business clients. These are some of the items we're going to be covering: understanding how undeposited funds works, creating credit memos, customer statements, and vendor credits. This is all a part of if there's any refunds that come through, helping clients create estimates and invoices, setting up QuickBooks payments, when to use journal entries, and a few other items. So let's go ahead and get started. Again, I'm going to be using my QuickBooks as a demonstration of how this works. So I have some things blurred out here for security and confidentiality reasons. But I am in one of my clients' books, and I wanted to show you how undeposited funds works, because of all the features in QuickBooks, undeposited funds is probably the most frustrating one whenever you first start out. It can cause a lot of issues, and if you don't know what you're doing, it can create quite a mess. So just starting off, undeposited funds is basically kind of a holding account for whenever there are deposits that have been made but are not put into your bank account yet. So for instance, this client that I have right here, they actually use a different program to invoice their clients, and they get paid through that same program. It integrates with QuickBooks, and then you'll see over here this deposit right here for $16,000. So if I wanted to, I could match that into, so this actually already came through the bank. But before it actually came through the bank, it had come through their payment program and got put into undeposited funds. Because this hadn't come through yet, I haven't had a way to actually match it and identify the actual payment that it goes to. So I'm going to show you guys real quick what that looks like, and kind of what undeposited funds looks like if items keep going in the undeposited funds section. So let me go ahead and do that. I'm very sorry about my phone going off, but let's go ahead, and I'm going to open this up and show you guys real quick what this is going to look like. So first off, what I want to do is get this date here. This is July 14th. I'm going to look up new. I'm going to click on bank deposit. Okay, so we'd basically go up here to this, and we would click July 14th, 2022, and then we would scroll down here until we found that $16,000. But this right here, this whole entire section that has all these numbers in it, which I'll scroll down a little bit for you guys and show you how many items are actually sitting in here, are items that actually need to be matched to the bank account. So let me scroll down for you guys. Okay, so there are literally 2 pages worth of transactions that are sitting here in this undeposited funds space. And the only way that we can get rid of that $16,000 is to match it to each transaction that comes through. So basically the way that it's set up is it'll come through as a batch, just kind of like how a credit card batch would at the end of the day. And it'll let me know, okay, this $898 is involved in that $471. Basically, clicking on a bunch of invoices is going to add that up to the point where I have the amount that I want, $16,000, and I save and close it. And then once I get back to the normal page, I can actually match it to the deposit I just made, and it will come out of undeposited funds. But I also just wanted to click on the chart of accounts and show you what undeposited funds looks like and how much money is sitting in there right now. And this is why it is so important to have nothing in that undeposited funds account, because if you look right here, you will see that it's $84,787.38, saying this is money that hasn't been deposited yet. And if you are trying to sell your company or do anything with your company, this is going to look bad. So this is why you always want to make sure that your undeposited funds are actually low and out of here. And the reason that this number is so high right now is because I haven't had a chance to really go through and make sure that all those deposits have been matched to the bank account just yet. So that is one thing you need to keep a lookout for when you're doing undeposited funds. And just right off the bat here, let me show you how it automatically goes into undeposited funds. So let me just give you an example. Okay, so whenever you click on an invoice, there's an option to click receive payment. So I just clicked receive payment, and it brought me to this page here. This is the amount that we're saying got paid. So if we were manually saying, hey, this item actually got paid and was put into our bank account, this is the amount received here. And this is where you can choose where that would be deposited to. So there's all these different options of where we can deposit it to, but for the purpose of this, we're going to have it go to undeposited funds because we know that we'll eventually match it up in there. But that is one way where you can change it. So if you ever come through here and a payment has been already matched to something, you can come in here and change it to the actual bank account you want it to go to instead of going into undeposited funds. So just a little FYI, that's how you work through undeposited funds. All right, everybody, so the next thing we're going to talk about is how to create estimates. So now I'm back on my actual page. You can access estimates from either going down to sales and clicking on estimates, or you can go to new and estimate. So that's what we're going to do, is click new and estimate. All right, so now we are on an estimate page. You can see I haven't really done any because I don't usually have to create estimates. Estimates are going to be more used for your clients and to be able to use them as features to show your clients. So estimates are going to be kind of like for painters, cabinetry, so on and so forth, where you can actually kind of estimate how much the actual cost is going to be. I know I worked at a vet office for a little while, and using an estimate to figure out how much surgery is going to cost, it's a real big deal. So anyway, you'd come up here, you'd click this drop down here, you see all your customers, and you just click one. You'll be able to click the estimate date, what the expiration date is, you can change that number. This is pretty similar to how you'd create an invoice, but basically you come in here and select your products and services. So like for me, these are some of the things that I offer. So I think one of these is like books cleanup or something. It says it right here, but that's kind of blurred out and in the way. But I can click whatever I want and go, okay, well, I think that the books cleanup, it's going to take me about, I don't know, 10 hours, and my rate is going to be, $50 an hour or whatever. So this is kind of what I estimate is going to be here. And then you can just send that out. You can choose to send it later, but once you send it, then it goes from pending to, there's these options here. Let me see if I can unblur this. So I unblurred it because that's just me and my information. But you can change it from pending to accepted to closed to rejected. So obviously, if they decide, yeah, I want to go ahead and use this, you can actually create an invoice off of this accepted estimate. You can close it out whenever you no longer need it, or if they said, no, I don't think I want to, then they can go rejected. And just for reference, I'm actually going to send this out because this is just being sent to myself, and I can actually show you guys kind of what it looks like. So this is saying, here's the estimate, if you have any questions, so on and so forth, and then I can show you what it looks like when it's accepted. Okay, so as I go into my information here and I click on customers and transaction list, you can actually see this estimate pending here. I can then create an invoice off of that, like I said. I can update the status to where it says accepted, so on and so forth. Right now, I'm actually going to end up deleting this because I do not need an estimate pending in me, but that is basically how you do an estimate. All right, so let's pretend that I have a client that bought something from me, bought a service, was unhappy with the service, or I didn't spend as much time or what have you, and I just wanted to refund them that. Instead of going in and deleting the invoice or changing the invoice and making it complicated, there is a way to add a credit memo. So we'd go in here to click New, Credit Memo. As always, you select which customer you want it to go to and the date. I'm going to put in here books cleanup, $25. And then I'm going to save and close that. So if you look here, this is the estimate that we had just made. This is the invoice I created from that. This is the credit memo I just created. Instead of it being $500, where it was in this estimate. Now $25 is taken out of that, and all that's left is $475. If we wanted to completely apply it, then we could completely apply that $500 and it would completely refund that whole entire amount. But let's say we don't want it applied to this invoice. We actually want it to be applied to an invoice that was already sent and paid for. Okay, so I just quickly created a new invoice for $25 right here. That I unselected it so that it's no longer going towards this invoice that I just created. But I want this $25 to be applied to this. So basically what I'm going to do is click on New, Receive Payment. Where is Receive? Right here. I'm going to find by invoice number actually, and I know that one was 1101, I believe. Okay, now it comes up with these invoices here. So like I said, I don't want it to be applied to this one for $500, but I want it to be applied to this one for $25. So we're going to save and close that. Now this shows that it's been fully paid and that payment and invoice are now closed. And that credit memo has been applied to that. And this one is still open with nothing going towards it. So that is how you would apply a credit memo to somebody's payments. And this can be applied to even in your customer's account and stuff that they can do. All right, so now we're moving on how to send out a statement to a customer. So let's say Angelica had just paid for this invoice here, that $25. I want to go ahead and send her an invoice or a statement for that. That way she knows, hey, this has already been applied. So I'd go here, statements available. It's already kind of finding this in here. You can put the statement type, balance forward, open item, transaction statement. I'm actually going to do transaction statement. I'm going to click apply. It's still going to pop up here. I'm going to save and send. This is what it's going to look like, showing this is the payment that went towards it. That's the invoice. So it's obviously zero. That's their statement to know where their standing is within you and your company. And this is very helpful for those that actually, they may have like some kind of membership set up with your customer and they may not pay their invoices consistently and they need to know how much is left to pay off. So at least having a statement showing the amount that's on there is going to be very helpful. And then just for relief of knowing how much was actually, that they actually were able to pay it and that they are no longer in debt to you. So that's how you do a statement. Okay, so next we're going to go into and talk about vendor credit. So if you go to that plus new button up at the top and you select vendor credit, it's going to be under like expenses or vendors or something like that. If you click that, you'll click your vendor of who you're getting a payment from. Again, this is in reference to an actual refund. So let's say that I purchased, let's say I got gas and fuel. I know from QuickBooks isn't very whatever, but let's say I did that for $25. And let's say that for as far as your customers go, they have an actual customer that they're applying this to. Let's say they purchased a product to specifically go towards a customer and their project. You can actually put in that customer information here, which is really nice. But let's say I got $25 and they're crediting that back to me because I don't need that. I'm going to save and close that. Now, let's say I wanted to double check that. If you go into your expenses column and click under vendors, select QuickBooks payments, you'll see right here this vendor credit for $25. And that can also be applied to a future purchase that I might have for them. So it's pretty easy on how to do vendor credits. Next, we're going to talk about bank deposits. So again, you go up here to click new, click bank deposit. I already kind of showed you guys how to do this in the earlier video. I want it to go to this account. It's very important to choose which account you want it to go to. I want it to go to this one, and it's today's date. The account that it's going to be for is going to be sales. It's going to be an income. The payment method, you can enter that in. I received it from, and I can choose who I want to put in there. The amount, cashback goes to business checking, or there's an option of this QuickBooks payments, and we can go into that later. But yeah, basically that is how you can manually enter in a bank deposit. And you'll actually see it show up in your income and in this chart of account that actually goes to this bank. Easy enough. Okay, so here is QuickBooks payments. It says these payments will automatically be added to a deposit transaction when they settle. So I already have something that was done here for a client of mine in their payment method, which I already have saved, where it automatically will deposit into my account here in QuickBooks and be done towards that. Unfortunately, I had accidentally charged your card twice. That's why it says refund here. But I was able to, this is an option to get paid much faster and actually directly being paid. All right, next we are going to talk about journal entries. Journal entries should never really be entered in by your actual customer. I would not encourage them to do this because it can create a lot of issues. Journal entries are mostly used for like opening balance equity, and for instance, this property purchase that was made for a client of mine. One of the things you need to remember whenever you're entering a journal entry is that the debits and credits have to balance each other out. They have to be the exact same amount here. So with all this information that I put in here, this is basically just information I got off a mortgage statement, what their debits are, what the credits are that they actually ended up paying out of their own pocket, and what they're actually going to end up borrowing. So you can see here that this was made, and you will find it in the chart of accounts. So I'll go back out of here and show you in the chart of accounts. Basically, I have all of this set up to where this kind of coincides with that actual loan that I created that journal entry for. In order to create a journal entry, you need to go to New, Journal Entry, and then you'll see these options here. So let's say for opening balance equity, this is probably the most commonly used one. I'm going to say it's going to be for this checking account. The opening balance is going to be 0, and we put opening balance equity. That's also going to be 0. Save and close, and then on that journal date, it's going to say 0. I obviously don't want to save that because it's going to mess everything up. But that is basically how you enter in a journal entry and some of the reasons of why you may need to use a journal entry. Let's say that your customer also has a credit card and they have it on file and they need to get that credit card paid down. So what we'll do is we'll go New, Pay Down Credit Card. So we're going to say, which credit card did we end up paying on? This is the credit card. How much did we pay? However much we ended up paying, and the date of payment, and then what we used to make that payment. So we can choose this account here, and then save and close. That's a real easy way to do it. Or if you see it in the banking area, I'm going to show you how to do that as well. Okay, so now I'm back in the banking page. I can see this transaction here for $12.19.12. This was already automatically kind of showing up this suggestion. What I like to do though as a precaution is I like to double check. So we're in the checking account. If I went into the credit card account right here, if I scroll down a little bit here, I would actually be able to see this section here that says this match was found, and it's for the exact same thing. So what I'm going to do is put in here, let me move this up. record as credit card payment. This is coming from that, and it's going towards Citibank. We're going to add it as a credit card payment. Now, whenever we go back into TVFCU, it has been recorded already as a credit card payment. So that's how you do that. Now we're going to discuss transfers. You can go here, New, Transfer. So since we've already seen some of the accounts, let's say we wanted to transfer some money from this checking account into, let's say we had another checking account. Let's just pretend this is another checking account here. We could put this transfer amount of what that's going to be, the memo, any attachments, and the date, so on and so forth. There you go. Simple enough, easy to do a transfer. All right, everybody, so that's going to do it for this video. I know it was much longer than the rest of the ones that I've done so far, but there's a lot of information to cover in this lesson. If you like this video, please give it a thumbs up. Leave a comment down below of if you were struggling with anything in this lesson. And also consider scheduling a phone call with Bryce to see how he can help you within your bookkeeping business and get you on track to where you want to be. So again, thank you so much, and y'all have a beautiful day. Bye.